Hey guys and gals, welcome to Miyagi Mornings, episode 83. Today we're going to talk about Bitcoin, maybe a little bit different than we have in the past. I think most of the things I've said, as we'll say today, I've said before, but I said them in broken parts and pieces here and there over the years. But yesterday, I came across an interview with Michael Saylor, marketed as a financial masterclass. It was a little over 2 hours, and I listened to it. And I was listening to it, and I'm like, yeah, I've been saying that. Yeah, I've been saying that. Yeah, I've been saying that. And then I was kind of shocked. I went ahead and bothered to look at the date of publication of the interview. It was published on Christmas Day, so it's several months, 4 months old now. And so apparently, Saylor and I have been saying a lot of the same things for a long time. Now, before you think I'm equating myself, let me put it to you this way. No matter how good you are at something, unless you're the best in the world, there's somebody better. And in the case of financial modeling and financial analysis, I'm really good. There's a lot of betters. There's a lot. I'm not even, in the top 10,000 in the world. I'm just switched on enough to understand this stuff. Having run businesses throughout a lot of my adult life, both small concerns like I do now because I like it better, and at one time heading a ship with over 2,500 employees. So I get this. But Saylor is above my pay grade. What you're talking about is an MIT engineer that is an absolute genius who has taken that training and applied it to finance and economics. And that's pretty incredible. And listening to his case, which was far more eloquent than the case I could make, and brought up things I never thought of, I was able to kind of condense what I've been saying into something that's a little bit more bullet point oriented. So while I recommend that you watch that interview and listen to that interview, I know not everybody's going to do it, so I'm going to try to condense a lot of the more important components of it into about 15 minutes right here. But I'll say this. You should listen to the Michael Saylor interview. And if you are someone that follows me but doesn't like crypto, do it anyway. And I don't care if it doesn't change your opinion on crypto. The fundamental understanding of economic energy, monetary energy, in that interview is something that we should be teaching people in high school. We don't. All right, so let's start off with, I really want to bring you just kind of a new paradigm, a new way of thinking about things. And some of this has always been true, but it's more true now. So we generally think that if a company has a bunch of cash on hand, that's a good thing. Then why do you invest in companies? Why don't you just hold cash? Think about that. Think about that. We have always known this, that cash is a form of capital in large quantities is a liability, not an asset. I mean, we list it as an asset, but if you have something that's costing you a lot of money every year, isn't a liability. Real inflation is about 15% right now per year. So if you have $1,000 in the bank, that's your cash reserve, right? Small potatoes. It costs you about $150 a year to hold that $1,000. You're not happy about it, but it doesn't destroy you. What it does is it makes you a gerbil on a wheel running faster and faster and faster and faster to get the same output. Okay? That's what it makes you, but you'll survive as best as you can. But if you're Apple and you have $100 billion on your balance sheet in cash, and you keep it in cash, you're burning $15 billion in shareholder value a year. You can't afford to keep doing it. Right now, you need to make about 20% on money for it to be worth risking the money. So if your financial advisor says, we did really great, we made 14% last year, you just lost a point. And if there's any if it's not in a completely tax-sheltered environment, you lost more than a point. With tax burden, et cetera, you need to make 18 to 20% of your money to come to par, to break even. That's paradigm shifting. And we've never had a time in history where we can look out 10 years and say, not only is it this bad, it's not going to get any better. With what they've done with money printing and are continuing to do with money printing, you're being conservative at 15% sustained over 10 years. So it completely erodes a balance sheet held in cash. Keep that in mind. Number 2, commercial real estate is in a burn cycle. I wrote about this in July last year. Commercial real estate going into complete and total tailspin collapse. And that doesn't mean every place, everywhere, every commercial building. But we have had an earth-shattering thing with COVID and the response to it, with Zoom meetings, etc. And major corporations that were spending billions to maintain their real estate are divesting themselves of all their real estate. Unlike a thing like Bitcoin, which is a fixed cap commodity, you can always make more buildings. Land is fixed in how much there is, but you can always put more buildings on land. And we have plenty of land to work with. Well, so now you have an expandable commodity in a retraction mode. So if you're trying, just as important to understand, even if you don't have lots of money, you need to understand where the money's going so you position yourself there first. So if you are a major corporation, one of the things you could have done in the past to beat this inflation curve with your capital is invest in real estate, because it's a good tax strategy and it depreciates, and you just keep borrowing against it and buying more. So you never pay tax on it, and you just keep getting more and more and more and more power to borrow and buy more with, and you take some of that money and put it in your operations. It's a losing strategy now. There's very few places where commercial real estate is in any way stable. There's certainly not enough of it available right now for this type of money to flow into that we're talking about. Next, government bonds are a lost cause in this case for large reserves. The only reason giant companies ever put their money in government bonds, it was better than making zero, and you could buy $100 billion worth and not move the market without liquidity. Like, you had instant liquidity with billions and billions of dollars in sovereign debt. Well, at this point, if you're making 2 points on a bond, but you're burning 15, you're 13 in the hole. You're burning 13% of shareholder value as a corporation or as a bank, etc. You know, unless you're a bank that can borrow on nothing from the Federal Reserve and make that little tiny skim off the top, and since you can do it infinitely with quantity, it doesn't matter. Anybody else, you're going to have to run into something else. You can't sit in bonds. You just can't. And Bitcoin is the answer. Because even if you're going to say, well, I'm going to invest in a company, what are you going to do? Invest in a company that's burning $15 billion a year in inflation? That company, to attract investment, is going to have to do something with that capital. Because again, this is why you invest in the first place. I really want you to let that sink in. Like, if it was good that Google had a bunch of money in hand or Apple had a bunch of money on hand, why are you buying their stock? You're buying their stock because you believe that they can take that money and do more with it than you can yourself. It's actually this is why I always call charity investing, right? The reason I'll write a check to a charity is because I believe they can do more good with the money than I can. The reason I will buy into the equity of a company is I believe they can do more with the money than I can myself. If I think I can do better, I'm not giving them my money. So cash is bad. That's really hard to accept in our world. And see, rich people always thought this way, but middle class, poor, working class people have always been taught to think exactly the opposite. And in some ways, saving money is good, and having some cash is good, and I'm not saying not to have any. But when you get to a certain point of reserves, you're burning your equity by holding cash. Bitcoin's the answer. So here's what I think is going to happen with Bitcoin. If you tuned in for a price prediction, especially short, midterm, I don't know. But what I'm about to tell you, I'm willing to lay some money on the line that all of these things are going to happen. And they're going to happen over the next couple of years. And some of them are already well into place. Starting out, though, I just want to point out, with everything I just said, if Bitcoin performs at 12.5% of its past results, right, or 1/8 of its historical return, that is it's a 200% annualized return over 5 years. Okay? Any 5-year period is about 200% for Bitcoin. If it does 1/8 of that, it's a 25% return, and it's a home run, and it solves every problem I just gave you. Every single one of them. 25% on your money, and everything works. It works for corporations, it works for banks, it works for people. It works for the dentist and the baker, and it works for the institutional hedge fund manager. But much south of that, it starts to break apart. Now, if I said to you, hey, I think it makes sense to invest in a stock portfolio that historically has done 25% over 5 years, 10 years, 15 years, it's done 25% steady. And I'm saying, you can bet on 5, you wouldn't even bat an eye. You'd say, well, yeah, okay, well, how's this different? If you invest 50 grand in Bitcoin right now and hold it for 10 years, and it does 1/8 of its historical returns, it will be worth just under $500,000 for you in 10 years. That's a pretty conservative bet leading into this. Next, PayPal, Square, things like this, where you can use and receive Bitcoin in PayPal. You can use and receive Bitcoin with Square. You can spend dollars with Square and earn cash back on the card in Bitcoin. These are way bigger than Bitcoin enthusiasts think they are. Way bigger. And the reason that they're bigger is we know why we got into Bitcoin. Those of us who are early adopters, those of us who use non-custodial, cold wallets, etc., and we store our money in a way where no one can ever see it, no one can ever get to it. It's ours, it's ours, it's ours. And the only time we ever have to deal with anybody's shit is if we want to go into fiat, right? We know why we did this. We know what Satoshi's vision is. It doesn't matter at this point. What matters is how many walls of money can be unleashed on the market. And what happens when you start having adoption by companies like PayPal and Square is people who couldn't buy Bitcoin, not because it wasn't physically possible, because they couldn't mentally get over the hurdle, now can go click and buy Bitcoin. The other thing that happens is all of a sudden I'm thinking, wait a minute, because I'm telling you right now, PayPal has a cashback program. I earn 1.5% cash back every time I use my PayPal debit card as a credit card when I buy something. So I buy a lot of shit with it. Because I like 1.5% cash back because it's not a credit card, right? I'm not going to get a bill for it. It's the same as spending cash, but I get 1.5% back. It's not huge, but it's something. But if Square's giving me 1.5% in Bitcoin versus 1.5% in dollars, which one do I think I'm going to use going forward? Okay, so when PayPal says, you know what, we got to do this too, right? Because they're gonna. Then all of a sudden Visa, right? And if it's not Bitcoin, it'll be Ethereum or something like that, which is dumb, but that's probably what Visa's going to do. But once you start seeing billions of dollars exit other forms of banking, because all of it is a form of banking. PayPal is a kind of banking. It's just, you hold your money and somebody's a custodian over it. That's a form of banking. If I can start earning Bitcoin just by using Square as my bank, then why do I want my bank for anything but the things I absolutely have a bank from? So maybe I stop holding my cash in my bank and I start using these other services like Venmo or whatever if I'm going to get cash back. So what do the banks have to do? What do the banks have to do? They have to come up with some way to incentivize their people holding deposits to retain the deposits there. They have to meet the competition. So this is all going to happen. Corporate money is going to flow into Bitcoin, and what you've seen so far is just the beginning of that wall of money coming in. Saylor makes a really good point that I hadn't really thought of. I always said the money would come, but let's say that right now, 100 big companies have decided we're going to go and spend between $500 million and $1 billion on Bitcoin. You will not see most of that money for on the inside track 6 months to on the outside track 18 to 24 months. Companies take a long time to be able to do something like this. Not everybody's an Elon Musk Tesla where they can just move on a dime. Most companies can't do this. They won't do this. There's 24 people in suits that think they're more important than they are, sitting around a conference table for a year to get something like this done, and they think they've done it fast. So that money's coming. You're only seeing the tip of the iceberg on it, and it's going to pour in over the next year and a half, 2 years, 3 years. Now, that is an immense wall of money. We're talking billions and billions of dollars of money. Next, on the same token, there are institutions that like Bitcoin. They think Bitcoin's a good idea, but according to their charter, et cetera, they can't invest in it. But every time a public corporation puts part of their cash reserves into Bitcoin, that's a public offering, and it's a stock, a registered security. I can buy that. So if I want exposure to Bitcoin, I can buy Tesla. When Coinbase goes public, which we'll get to in a second, I can buy Coinbase. I can buy any public company that's holding this. So if I'm a mutual fund company, if I don't already have a mutual fund that easily converts, I can just create a new mutual fund and I can invest in mutual funds, or I'm going to invest in stocks within that mutual fund that give exposure to Bitcoin or Ethereum or other cryptos. That's coming too. And, well, Coinbase goes public, all bets are off. Because when the United States government gives the green light, and they're going to Coinbase, yes, you can be a publicly traded company traded on the stock exchange. And their only business is crypto. It's the only thing that gives them value is that they allow people to buy and sell cryptocurrency. Once that happens, you can't turn to an ETF or a mutual fund company or whatever and say, yeah, you can invest in Tesla and MicroStrategy or whatever, but you can't directly invest in cryptocurrency. The two worlds go into a place where that doesn't work anymore. So now you get an ETF, a true Bitcoin ETF, which Canada already has, by the way. And some other, Western countries have already approved by their version of the SEC. When it happens in North America, then the money from IRAs, Roth IRAs, and 401ks, that wall goes, and now we're talking hundreds of billions of dollars in small cumulative investment. That's going to happen. These are not things that might happen. These things are going to happen. And I've been saying it for years. Like I said, Saylor just did a better job of explaining it to me. As these companies like PayPal, like Square, etc., Coinbase with their card, etc., as all these gateway companies, as other companies that are technology giants like Twitter and Facebook realize, Facebook's own independent cryptocurrency is an also-ran. It's not going to really work for this model. When these companies figure out that they can incentivize with crypto, they're going to do it. And as they do it, all the things that people call problems for Bitcoin. Well, it only has so many transactions an hour or a block, and it's not fast enough, and it can't do 100 kabillion zillion transactions a day per second or whatever, will be meaningless. Because we already have the systems in place to do this, and a lot of these problems for the network just go away. Because instead of, a million transactions an hour, PayPal will make one with 1 million in it. And I know that's not Satoshi's vision. I don't care at this point, okay? I don't control what happens. I can just look at what's going to happen and say, how do I position myself to take advantage of it? It would have been great if Bitcoin could have said all pure as the driven snow and just was a medium of exchange between private individuals. It's still that, but it's going to be all these other things too. And if you position yourself right, I believe it can make you extremely wealthy. So that's going to happen. And then as these walls fall, so think of it as there's a bunch of money behind this wall, and the money comes in. Another wall, right? So now you're going to get into a point where it's 401ks, IRAs, but it's also more and more corporations taking part in this. It's going to be hedge funds. It's going to be banks. It's going to be pension funds. And it will eventually be governments. There are already governments that are mining Bitcoin, and they're not selling it. Okay? Right? So we're going to have this complete adoption of this limited quantity that no one can screw with. The 21 million is the hard. You can't just make more, ever. And once that happens, you are going to end up with the lobbyists that represent all of these entities protecting it. So all of this black swan shit where, Bitcoin's going to go away, when you start getting these corporations that have always written the laws, because if you think congressmen write laws, you don't know how Congress works. So corporations hire lawyers to write bills. They give them to lobbyists, and lobbyists give them to senators and congressmen and grift the money into their PACs, and then they submit that to their committees, and they work on getting them approved. So once you turn that apparatus toward the protection of this asset, which once it's their asset, they'll want to protect it, because who doesn't? Then all of this talk about, they're going to regulate it out of existence or whatever goes away. As far as regulation, they're going to tax it, whatever. It's taxed right now, okay? And what people don't understand is Bitcoin is a great tax deferment strategy. And the problem is that people who are not wealthy and don't have wealthy mindsets think with poverty consciousness. And they think, well, they're going to tax it at some point. Well, they tax your stocks at some point too, stupid. They tax your income too, stupid. They tax your house too, stupid. Taxes are part of life. We can either avoid taxes or we can defer taxes, and both are valid strategies. So this is what people I don't think you're getting this. You could go to Coinbase tomorrow, buy $100,000 worth of Bitcoin and leave it there if you're foolish enough to leave it on a custodial account. The people that run Coinbase could send all information they have about you to the United States federal government, including a picture of you with a Bitcoin shirt on petting your dog. You owe $0 in taxes. 5 years from now, that Bitcoin can be worth $500,000. Let's say it goes up fivefold one time each year, 500 grand. You've now profited $400,000 in your brain anyway. You know how much you owe in taxes? 0. If you then sell $10,000 worth of Bitcoin because you need it, you pay tax on the gain of that portion of Bitcoin from that original $100,000. So if you hold Bitcoin till you retire, and then you say, well, I'm going to take $50,000 out of my crypto portfolio every year, you pay tax on the $50,000 as it comes out. The rest of it is tax deferred for as long as you leave it in that form. I'm not talking about like-kind exchanges, which are illegal. I'm not talking about the backdoor shit you can do. I'm talking about if you are as white as and lily as the driven snow with purity, that you totally tell them everything you've done. You do not pay. It's a commodity, and it does not have a dividend. I guess a proof of stake coin would be considered a dividend, so those would be taxable. If we're talking about Bitcoin, it is an incredible tax deferment strategy. You sweep your surplus capital into it and you let it grow. And you only pay when you pull it out. And when the Roth IRAs become available to buy it, I would take as much as you can and move it into that form, because then it's never taxed. Never taxed. But I'll take tax deferment. And if people that don't see the value in tax deferment, you're going to be broke for the rest of your life until you start understanding these concepts. This is why I've preached financial literacy since 2008. I've said things like get on the financial term of the day from Investopedia. So you get a little email every day that gives you a financial word and explains what it means. So you become financially literate. Capital deferment and tax deferment are vital to becoming incredibly wealthy in the society that we live in today. The rich understand it, most of you don't, and that's why you're going to stay broke even if you think you have money. Now, I don't mean to be a dick, but I'm just telling you the God's honest truth here, and Bitcoin is not the only place where that applies. Next, I want you to start thinking about it this way. I don't crap on alts the way Saylor does completely, but overall, Bitcoin won. It's over. It's done. Bitcoin's Google in the search wars. Ethereum's Yahoo. Still around, but you know what? There's still people waiting to get their money back who paid way too much for Yahoo back in 1999. And they're not getting their money back, right? And Yahoo makes money. Yahoo's not a failure, but there's one Google and there's one Bitcoin. Ethereum's Yahoo. They'll be okay. I think it's a $10,000 asset when they pull off 2.0, if they pull it off. That's why I'm continuing to hold my Ethereum. I think there's places for other cryptos, but they're not going to be Bitcoin. No one's unseating Bitcoin. The battle is won, and people just don't see it yet. When we think about the supposed problem with energy with Bitcoin, right? And I know this is a long one today, but this is so important to understand. We think about the problem. Just imagine this little box of timers here that I have, right? Imagine this is an ASIC computer. And this is thousands of dollars, and it takes a lot of energy to run this. I plug it in somewhere, and it starts participating in the Bitcoin network, and it starts earning me a little bit of Bitcoin, and hopefully enough to pay for itself, right? Okay. The only purpose that ASIC has is to secure the Bitcoin network. It's not a problem. It is the solution. People are like, well, no, it's so they can mine and make money. But why? It's thousands upon thousands upon thousands of computers contributing to the most secure network that has ever existed on the planet in a 100% voluntary basis. It's beautiful. And that's the value of the Bitcoin network. It's not just that there's only 21 million ever to be minted. It's the security. It's the stability. It's knowing that when I send you, enough Bitcoin for a scone or a Ferrari, you know that Bitcoin is valid and it can't be stolen from you. That's it. And that is done. No one will ever, in the foreseeable future, unseat that. There's too much first mover advantage. You can say, well, this is better money. I don't care. No one else has that. And lastly, we also need to start understanding, with that in mind, there's Bitcoin the asset, and there's Bitcoin the network, and both of them are important. We have services now being built on the Bitcoin network that don't necessarily use Bitcoin. A privacy coin called R, also known as Pirate Chain, uses 3 blockchains simultaneously for security. One happens to be the Bitcoin blockchain. We have another, I think it's called Strike, where you can basically send money anywhere in the world for free. It's using the Bitcoin network. These technologies I talk about, like PayPal and Square, etc., yeah, they're using Bitcoin, but they're really using the Bitcoin network. The value of that network is extreme, and Bitcoin is a piece of the network. That's what you're buying when you buy Bitcoin, a piece of that network, which is the most valuable network in the world, with more money coming into it. And how do you build a financial network? You add money to it. And when the money comes, the protection comes from government, which is the only threat that there is right now. And you know that when money comes into the lobbyist field to protect the thing, it stays with us forever, no matter how many people don't want it, and people do want this. So I'm just going to say, if you're not investing in this space right now, I think you're missing out. If you're a financial advisor and you're so old school, you can't see the place where you start making a recommendation that your clients put some of their portfolio into this, you're doing a disservice to your clients. This is not going away. This is not tulip mania. And I recommend that you get started and you ease into it. I know some people hate Coinbase, but if you have no Bitcoin and you want to buy it for cash, it's the easy, safe on-ramp. And yes, they're going to ask for your ID and all that, but remember what I said. Buying Bitcoin does not incur a penalty. Buying Bitcoin does not incur a tax. Trading or selling it does. If you're investing long-term, you're in tax deferment mode. And again, I'm going to go back to this. If we perform at 1/8 what we've performed at, not even since inception, because that's so Bitcoin was worth a penny or whatever. Since the last 5 years, we perform at 1/8, 50 grand put into Bitcoin, in 5 years is $465,000. That's math. I'm not guaranteeing it's going to happen, but all of these things, they're going to break down these walls of money. I am. Because the writing is on the wall. Does that mean there can't be a black swan event? No. But, man, you play the averages in this world. That's how you win. With that, you can check out all the resources, including how to get free crypto, etc., in the video notes below. Sorry this one went almost 30 minutes, but I'm actually not going to be on this subject now for quite a while. But I felt this was incredibly important, and I really recommend you check out the Michael Saylor interview also in the notes below. And hey, Michael, if you're out there, I'd love to have you on TSP. I heard your comments about you don't think the zombie apocalypse is coming. Just because we call ourselves a survival podcast does not mean that we are hiding in bunkers with tinfoil hats. This is the kind of thing we've been talking about and doing since 2014 now when it comes to Bitcoin.